Hello, I'm Carolyn Herbert for the Finance News Network, and joining me at the 2017 SMSF Summit in Sydney is Chief Economist at AMP Capital, Shane Oliver. Shane, welcome.
Great to be here.
So Shane, where do you see the best growth opportunities?
I'd have to say they're still in share markets. Shares have had a great run since February of last year, but that said, and they could be due for a correction. But by the same token, if you look through that, look at the global growth environment, it's on the mend. We've got an environment of still very easy monetary conditions. Profits are rising. And I think there's still a bit of scepticism about share markets overall on the part of investors. People haven't still fully bought in. So I think there's still more upside in share markets. And I'd particularly nominate Eurozone shares if people want to look beyond Australia. Eurozone shares, which I think have lagged for years now, the Japanese share market and parts of the emerging world.
So for SMSF trustees looking for income, what are your suggestions?
Well, that's a good question. My mother has been asking me about that one for years because she's seen the rate of interest she gets on bank deposits dwindle. And of course, that's a big concern for people who want that income flow. I reckon you've got to look at a mix of things. Hard to go beyond the Aussie share market where the income flow is particularly attractive. You're getting grossed up dividend yields approaching 6%. Don't just buy one share though. Make sure you have a well-diversified portfolio of companies that have a good track record of paying dividends over time. That'll assure you of that income flow, but obviously you have to put up with a bit of volatility in the underlying investments. You can also look at things like commercial property. That's another one to look at. Probably stay away from housing unless you're well away from Sydney and Melbourne. And I guess corporate debt, still worth having a look at, but the yield there is relatively low at the moment.
So the million-dollar question, which you probably get asked very often, is what's your outlook for local and global equities markets, particularly post-Brexit and under a Trump presidency?
Well, I guess the good news is that Brexit last year and Trump haven't caused a huge setback in markets despite the fears at the time. My feeling is that the trend in share markets is still well and truly up. We are due a bit of a correction in the short term. We know the story about the September quarter. It's often a rough one. Sell in May, go away, come back on St Leger's Day, which of course is late in September. And of course there are these uncertainties about Trump, North Korea, the Fed, blah, blah, blah. But if you look at the environment we're in, I think it's a pretty positive one for investment markets. One where inflation is not really an issue, central banks are still benign, we're seeing good growth globally, we're seeing sort of okay growth in Australia, so Australia's a bit of a laggard. But that combination should all result in stronger profits and a rising trend in markets through time. And I'd probably have a bit of a bias towards global shares relative to the Aussie share market.
Now, the residential property market's a big talking point at the moment. You know, there is talk that we're in a property bubble in certain states around Australia. So do you think it's still attractive, and what do you think SMS trustees need to consider?
I think you can't generalise on Australian property. There's big opportunities out there. Parts of regional Australia have not participated in this huge surge we've seen in Sydney and Melbourne. Perth has been going backwards for many years now. So I would be looking at the laggards. I'd be looking at opportunities where you can still get good rental yields, but they're probably not in Sydney and Melbourne. I'd stay well away from Sydney and Melbourne, particularly if you can see a crane near the building that you might be thinking to buy into. Those two markets are due a pullback. Sydney property prices up 75% over the last 5 years, wages up something like 12%. That's gone way too far. It needs a pullback, and we're going to see that. Not a crash, but I think we'll see a pullback. But yeah, sure, look at other parts of the property market around Australia, regional Australia, centres where there's good demand, where vacancy rates are relatively low, and certainly have a look around places like Perth, which have been a really big laggard.
Shane Oliver, thanks very much for joining us.
My pleasure, thank you.